Broadcast. Welcome to the 42nd episode of the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. My name is Joe Nikruto. I'm here with
Dan Hussey, everybody.
Dan Hussey, everybody. How you doing, Dan?
Good, Joe. How about yourself? Well,
couldn't be better.
I guess I could be. I'm fine, but my family could be better. We got the flu running rampant. We are plagued in the Hussey household this week. Not fun.
I was a bit under the weather myself, and I'm just happy to be here after that. I could not be more excited to not be under the weather. But it's that time of the year, right? I mean, everywhere you go, everybody's getting this, everybody's getting that. Some of it's bad, some of it's going to last for a couple days. But man, oh man, be nice to see. And I think we gain 70 minutes of daylight between now and the end of February.
Now that's something that we can be excited about.
We'll take that, right?
Yeah, absolutely.
We'll take that. The faster we get to daylight, the better. Before we get started, everybody, we want to let you know that if you're interested in hearing about grain market price action and strategies, you can sign up for our Zaner Ag Hedge Hotline, hosted by expert market strategist Ted Seifert, totally free. Gives you the chance to connect with us, Dan and I personally, if you have any specific questions about the markets or agricultural commodity and agricultural commodity price action in general. If you're interested in learning more about how this price action works and how to make that price action work for you, it's a perfect way to take a first step. Link in the description below to sign up for that. Totally free, zero commitment. Put your name and your phone number in there and we'll give you a shout right away. Dan, I don't know what to make of some of this price action here this week. I was just trying to hang on from one day to the next, news story to news story, open to close, but some interesting market movement here. Corn, fine example. Weekly update for corn. We opened at 484.5. High was 497.5. Last trade I saw 477.75. Close was 482. That was down just 4.5 on the week, which sort of belies that 497.5 move to $5. 18-day I got at 478.5. The 50-day all the way down at 455.5. What do you think? End of month, little tariff action. What do we got here? Funds long, 303,000 contracts.
Right. I think all of the above, right? I mean, we were in a pretty much parabolic move in corn. It was only a matter of time before you saw one of these types of moves and, a pullback right down into the 18-day, like you said, that is still holding a support. But I think it does cause into question, right? Is that weekly close? Is that a weekly reversal? And you look at the weekly candles, it's an outside week lower right now. We would need to see follow through into next week lower to kind of confirm maybe a deeper move at this point. But it does make you wonder if the top, is in the short term. I will note that, gapping down and yesterday's price action on the overnight leaves us with an open gap at 490 above as well. It doesn't mean that we have to head away from that forever. We might come back up to meet and, test that area and that $5 mark again sometime between now and springtime. But the way this market's moved and over the last couple of weeks has been absolutely on a parabolic tear higher. A pullback like this was only, I think, inevitable at some point.
And you need it if you're going to continue the uptrend.
Absolutely. Right. We were overbought for too long. You need to go down. And technically today was the first day we saw stochastic RSI flip to that oversold condition. So, things don't head in a straight line forever. You need, like you said, to unwind a little bit, to find a period of price discovery, find where that support is so that the next rally can occur if it wants to.
Weekly for March beans, we opened at 1050. The high was 1061.75. Low trade of the week, 1034. Last trade I saw was 1042. Beans, that was down 13.75. Funds are long, coming into the day an estimated 28,000 contracts. 18-day at 1038. But we closed above at 1042. So what do you call that? A moral victory for beans? I don't think that the bean situation is the same as the corn.
No, I do. I think that's a great point of moral victory. I will point out that, earlier this week, or I guess last week it was now, the high was right into that 200-day moving average. So, a technical resistance zone we ran into didn't break through on the first go. That's okay. If it gives it another run up there, I think it probably will go through it. But we pulled back to test the 18-day, that shorter time frame support level. We also officially closed that gap at lows of the day that we had from January 21st. So kind of cleaning up some downside levels. And I also want to point out that if we do continue, lower into next week, 1022 is that 100-day moving average, and 1016 was that breakout high from WASD, the January WASD. So we're just pulling back into old supportive levels at the end of the day. And really, soybeans have been kind of in this trading range between 1060 and 1022 since the middle of the month.
How about bean oil? I had not thought I was going to pay too much attention to bean oil. Then I looked at this weekly chart. We opened at 45.09, high was 46.81. This is March bean oil, by the way. Low 44.10, closed at 46.11. That was up 89 on the week. Is bean oil trying to break out?
I think there's a lot of headline trading with bean oil right now, and it must be heavily being traded by those that are paying attention to these tariffs, because it actually followed that whole tariff news, which headlines that we saw on the day, which we were talking about before this. Early on the day, bean oil was up, following leading price action higher. Then around 11:05, we got that Central Standard Time. We got that first kind of shot across the bow that, hey, maybe tariffs are off the table or not. It sold off heavily right around 12 and noon. I believe it was right around noon when the president's press secretary, Caroline Leavitt, came out to diminish any rumors that they'd be pushed off by a month, and we rallied all the way back on the day. So it's like, I think bean oil was getting traded around based off of those headlines today. And certainly having broken out, pulled all the way back to test support and close where it did at, basically highs of the week. That's an impressive, very quick period of price discovery that, said, hey, I want to be above 46 right now. And I think then the idea that it could be breaking out higher into next week, a push above 47, look out above.
Leaves us chewing into today's close, leaves us chewing into that minor, maybe not minor, but a gang of previous highs here during this consolidative period. We're chewing into that, and it looks to me like maybe path of least resistance puts us out on the other side of those levels.
And for the last 2 weeks, we've been suppressed below 46, really the 45.79 high from the 28th, and been above 44. So that, $1.80 to $2 price range is now broken, right? And that consolidation should be considered complete.
You look at meal, tale of two cities here. The other side of this coin opened the week 302.50, high 310.80. Low trade that I saw for the week 298.60. Last trade 301.10, down 380 on the week. Funds are short, still about 60,000 contracts. But Dan, to me, technical nowhere land, bounded by upside 321, low side 284. We closed the week 301-ish. What can we even say? There's some talk that maybe fundamentally they're beginning to have to look for meal where we thought, a week or two ago there was meal everywhere. Now all of a sudden maybe they're having to go and find it. I don't know about that. That's just talk, but you can't see it by looking at the chart.
Yeah, right. And I think you're right. You're caught in technical no man's land. Can't get above the 100-day right now. Can't get below the 55-day. The 18-day has been transversed, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times since December. I mean, that's just chop. That's proverbial chop. And without a direction in meal, I find it hard pressed to believe that any of the soy complex is going to have a real clear direction. But, soybeans themselves were rallying without the meal, so to speak. And now without a lack of direction in the meal, soybeans themselves have kind of pulled back. And I know we'll get into those numbers here in a minute.
How about this wheat? File under sneaking Sally through the alley. March wheat opened at 543. High was 569 3/4. Low 532. Close. Last trade I saw 559.5. However, that's up 15.5 on the week in a market where the funds are short 86,000 contracts. Are we knocking on the 100-day moving average?
In the Chicago, we did, and we pulled back to hold that 55-day around the 549 area, the 18 days just below 546. Interesting to note, the KC hard red winter March contract is above that 100-day. It broke above it 2 days ago, and today and the day before, we're basically testing it as support. Same could be said for the spring wheat. We actually closed right up on that 100-day after getting above it here in the last 2 trading sessions. So I think that's exactly what I think wheat is doing, is it's trying to find the resistance to break through at this point in time. Without doing so, it's still in the ranges we've been locked inside of, but it's looking progressive, right? It's making series of higher highs and higher lows on those intraday swings. That's constructive on this, on the most basic, definition. I also would call attention to the wheat to corn ratio, which today in the March contract closed at 77.5 cents over. So wheat at a 77.5 premium to the corn. We got as low as 52 cents there. That's pretty darn tight. I mean, I was wondering for a while here, are we going to parity with corn rallying and wheat being unable to do anything, right? But it looks to be that the bear spreading and that wheat to corn ratio has been abated. We're back above the 18-day, and we might be, trending back towards that dollar-wide spread there. So I'm looking, at this period now of maybe some consolidation in corn and maybe that constructive price action in wheat to bring that wheat to corn ratio back to a little bit of a wider range that it's been in.
Have seen commentators discussing wheat as kind of a value play, a market that has maybe been held down or kept low by technical pressure. That technical pressure, as you mentioned, is beginning to abate. I've read some commentary from ADM where they talk about this wheat corn spread, allegedly, where funds are very long corn and very short wheat. And if they begin to try to rebalance that, maybe you could see some selling in corn and certainly some buying to cover that short position in wheat. 86,000 contracts in wheat with Russian exports slated to come down. Wheat crop all over the globe challenged. All of a sudden, wheat might be something.
Yeah, and I think that the Russian export figures, that's something that in 2025, with now a new administration in the White House and calls for peace, in the Ukrainian-Russian conflict, it's going to be really interesting to see if more or less the global headwinds from that Russian crop or any Russian trade, if that goes away, I'm wondering if that wasn't some of like the pressure that we've seen on wheat in the last several months, like an anticipation of that. Because hey, I'm a full-fledged believer that there was nothing that we could do to actually keep Russian commodities from hitting the international market. They've got a shadow fleet of oil tankers. They could move agricultural products through the Ukraine still and through some other ports of call, even with sanctions. But if those tariffs are completely off the table and Russia's allowed to do business, or not tariffs, if sanctions are off the table and Russia's allowed to do business, that is going to put a little pressure on the wheat market. But I don't know. I kind of feel like we've been trading that idea for so long that maybe it's a sell the rumor, buy the news type of event here that wheat prices have just been so depressed. And like you said, there may be a value play there.
Cattle, speaking of value, open the week 205.02.5. That's Feb cattle right up front. High 209.35 in the cattle. I think that's a record. Low was 203.50. Fact check me on that. I'm not sure. Last trade 204.60, down just 17.5 on the week. Cattle market ran right into, and again, not quite sure what brought it down. But did indeed see 2 solid downward days, 2 days of big time price action to the downside. Same thing with feeders. Opened the week in the March 277.77.5. High was 279.82.5. Last low trade 272. Closed 275.72.5. Down just 85 on the week. Both cattle and both fats and feeders running into a little bit there. The more I watch this cattle market, the less I think that I know
about cattle, right?
We are importing a lot of meat. We're importing a lot of ground beef and trimming. We are importing, allegedly, we had the border closed with Mexico. Some talk about Mexican cattle finding their way across the border. what is the actual number of animals. Smallest cattle herd remains smallest since 1950 something. I just don't see how we're gonna resolve this.
Well, I think if price rationing of demand is your answer there. Plus, I think a continued rally in row crops, corn and meal specifically, that's going to throw a wet blanket on this cattle rally. But you're not wrong. I mean, the demand is there. You see the incredible prices being bid up in the north on the cash. You're seeing animals being moved north to try to arbitrage that type of bid. But at some point, that mania comes to an end, right? And whatever it was the last 2 days that sparked a bit of a sell-off, the market got caught, and support held here, specifically in the feeder complex around that 18-day moving average on almost every chart. You have to go out to the
Fats
August
too, right?
You have to go up to the August fats to see that 18-day get held. The Feb fats have still quite a ways, still 4 points lower to go. Let's see what that April. I guess April did too. April did get down there,
which is super interesting in and of itself. The fact that
right.
in the February contract, you're still 4 full points away from any kind of test of the 18-day moving average,
which is crazy.
Speaks to the strength up front.
Absolutely, and I think that you're starting to see some of the deferred months get, had to catch up a little bit here in the near term, but are definitely lagging because of the fear that, hey, there's going to be a, head coming down the pipeline. Everybody's going to be trying to fulfill that demand at these prices, right? Something I would point out, though, on the feeder complex from April all the way out to August, yesterday or 2 days ago, we had a key reversal. It was an outside day lower followed by a red day. So while today's open was met with some crazy volume and basically traded the entire range for the day, if we fall through the lows of this week and basically the lows of today and yesterday, we're really continuing to confirm that key reversal off of the contract and all-time high there for these contracts, and it puts you below the 18-day. That, to me, would spark a technical reversal. As it stands right now, you just have the first steps off the highs. I haven't seen the guy take it, the first steps up onto the diving board. I haven't seen the guy jump off the diving board just yet. But taking out lows of this week, I think, would be a surefire technical reason to think that cattle prices have topped.
And should you start to take out those lows with the size of this fund long, and I can't remember, I thought I had the number in front of me, 146, 136, with the size of the fund long, one should not be surprised if lower prices immediately arrive. But I have to couch that in the fact, Dan, that you and I have sat here for many months, and this is not the first key reversal we've seen.
Correct.
In the cattle market that did not, if we're looking at past performance measured in the last 3 or 4 months, cattle market finds a way.
It does, but at least this one is, at the extremely high levels that we're at, right? It's the first warning shot across the bow, if you will. I would still pay attention to the cash markets. They're going to be king here. If the cash doesn't break, if the consumer's still buying box beef at the prices that they have it, this market will continue to run higher. And it's interesting that it may be the leader of the next round of inflationary pricing, right? If we remember back in 2018 through 2019 into 2020, row crops were pretty much the first markets to show true inflationary moves, other than like lumber and a few other weird ones. But they were the first ones where commodities really saw that inflation. It happened in agriculture, where the rubber hits the road for, American consumers. The things we need, to eat happen to, sometimes lead the way. Energy prices can do so as well because, hey, it's a permanent demand in our balance sheet. But energy also has the headwinds of an administration that is flipping the narrative from being more green oriented and not as big on drilling to drill baby drill, as Trump said. So I can understand why energy prices are down. However, energy prices, gasoline and diesel, if those prices come down, that is only stimulating for markets like cattle and other things to continue these runs. And we're going to continue to see an expansion of these markets, I think, in the near term. And like you said, smallest cattle herds since the 50s consumer demand is there. The only way you take care of this problem is through price rationing demand and higher prices.
And you look at what has happened. I don't want to get too far afield for our purpose here today, but you look at what has happened with open interest. There was some mention today. I can't remember who had posted about it, but there was some mention about
somebody much smarter than us.
Right. Look at open interest change from August until right about now. Open interest in corn is right at a record 2 million contracts. That's an increase of about 640,000 contracts in a matter of months. And so it could very well be that, for a long time, Dan, we would sit here and lament that the hot money was staying away in droves, right? Your quote unquote smart money was involved in other places. And now all of a sudden with these open interest increases and the kind of technical support that these markets have seen, cattle, crude, ag, corn and beans, wheat to a lesser degree maybe. But this open interest has coincided since August, September, October with kind of a move higher in some of these markets, and very, very interesting timing.
And you got to pay attention to that, because as that open interest starts to unwind, as fund positions start to flip, those are the internal catalysts, right, that can cause a high to form. And I think that's a good leeway into just a quick segment here for our viewers of like, what do you do with prices as they stand? Bean prices right now aren't as favorable as corn, right? If we stayed at these prices into planting in just a few weeks, a couple months and a few weeks, a couple months and a few more
coming
weeks,
right
right?
Up. Yeah,
coming right up. Thank you.
Yep.
Right. I think right now we're really favoring corn acres based off of what we see. Darn near $5 corn sure beats at least all the producers I'm talking to, and every guy I know beats 440 or 1040 beans. 6 ways to Sunday.
To the tune of about 3.5 million acres so far.
Exactly. And that could get bigger, right? If we stick at these prices, which is a good reason to think that between now and then we might see a little bit of an equalization in the corn to bean ratio. But, I was talking with some producers today about looking at, the reality of being able to set a floor in corn by buying a put right now. I mean, heck, not that this is a direct recommendation to anybody, but we closed the day 450 puts for corn were 32.75 cents. That's a lot to lay out, but it does give you the benefit of putting a floor high and tight against a 460 close on December. Turn around. If a number like 550 is attractive to you, you can almost cut that cost in half by selling the 550 calls and bringing in about 16 cents. I mean, that gives you almost $1 of potential upside if you've got a good basis over $1 of upside potential to 550 corn, and being able to afford putting a floor under the market here for only 16 cents by buying that 460 50 put, and selling that 550 call. That's called a collar or a risk reversal strategy. But if we're thinking that corn might be getting a little toppy here, we're worried, we wanted to take advantage of this run up, that's a good way of leaving that upside open while getting a very, very aggressive floor in place and locking in those corn margins for yourself right now before corn and beans start to equalize. And then, hey, into planting, if we see that bean rally a little bit and corn come off, then you can put on similar strategies for beans. But I definitely think, hey, with the type of price action we saw today in corn, rejection at $5 in old crop, new crop coming off that 200-day moving average, I do think it is probably wise to think about that management strategy in this environment, because prices are better than they were. I mean, you got to go back to July to see these corn prices, right? I mean, it's been over half a year at this point. So take advantage of things when the opportunity is still here versus trying to figure something out in a couple of weeks into planting season if that corn price has come off a little bit just because we can't afford those acres.
And if folks want to cut that a little finer and find out if that type of strategy is indeed right for their operation, because we never know, right? We're just talking generally here. But if we want to find out if that sort of strategy is right for your operation, just cruise over to the Zaner website. I had somebody contact us the other day saying, hey, I'd like to talk about some strategies. I've got some things I want to look at. Left us some information. Was able to contact them directly. And lo and behold, we got them a ton of great information. There's no cost for that. There's no obligation. Just two people having a conversation. So do not hesitate. It's very easy to cruise over to the website, put your information in, and we'll give you a shout right away
Yeah, absolutely. Don't worry, folks. You're not setting up yourselves up for a crazy marketing scheme or for us to be contacting you religiously, right? But we're here to talk to you if you have any questions. The information's always free over here at Zaner.
Trump set to impose tariffs on Mexico, Canada, starting. Now, this headline came from Reuters earlier in the day. There's been some question and further clarification as the day went on. This says March 1, but White House confirmed today those tariffs scheduled to go into effect tomorrow, Saturday. U.S. President Donald Trump is expected to announce new tariffs against Canada and Mexico that will begin, but will include a process for the countries to seek, specific exemptions for certain imports. Tariff situation remained fluid on Friday with no decision final until Trump makes a public announcement that may have been taken care of. Separately, administration officials said Trump on Friday was reviewing tariff plans, which may allow for some exemptions, probably a key point there. Exemptions. Still, any exemptions would be few and far between, while the announcement of tariffs may roil financial markets and strain the U.S. relationship with its top two trading partners, offering a bit of a window before implementation in the process for exemptions would suggest a more careful approach by the administration. Let's scratch that because that's not how that's going down as of today. It would also buy some time. Apparently, negotiations ongoing between Canada, Mexico, and the U.S. With stated goals for duties and pressuring the two U.S. neighbors to halt the flow of illegal immigrants and deadly fentanyl across the U.S. border. What I saw, not in this same article, but in a different article, said if they're able to meet these requirements that the administration is laying out, hey, immigrants, hey, narcotics, we could remove these tariffs immediately. So as more information comes along, I guess we'll have a better understanding of what is really taking place.
Yeah, I think you hit the nail on the head. There's definitely a path to no tariffs for any, it seems like any country that is coming to the table, which is good. You know, these aren't abrasive threats. It's a quid pro quo. It looks like type of relationship and strong arm dealing. But we did, I think, see that. And I apologize. I can't remember if you mentioned it, but they flip-flopped today, right? Headlines on when these tariffs might come out. Is it a month from now or starting tomorrow? I do believe we had the latest was that the press secretary came out and said that no, just spoke with President Trump. These tariffs are going in place tomorrow on February 1st. There was some talk they might be pushed off till March 1st. So that's why there was, hey, even the stock market saw some volatility today based off of that. But from what I gathered last we heard was these tariffs are starting tomorrow, and that there is a call to action, so to speak, for how these countries or any country can get them removed. And like you said, revolving around fentanyl and illegal immigration. And I'm sure there's other talking points there for what they need to address. But we will see. We will see. U.S. agricultural trade background given potential tariffs. The Trump administration has suggested use of tariffs on goods coming into the U.S., which could prompt retaliatory efforts by other countries. As agricultural imports are large, tariffs could raise the cost of food products. Now, I do caution everybody because agricultural tariffs have never been on the table with the Trump administration before. Again, people talking about them. If everybody remembers the trade deals with China, agriculture was mostly left away from some of their other retaliatory tariffs. So we'll see if that rings true this time around. However, it is very true that these could have caused a rise in the cost of food and products. Canada and Mexico are the first and third largest countries in terms of agricultural imports to the U.S. Any tariffs on agricultural imports would likely have the greatest impact on Canada, the EU, and Mexico. Soybean exports as this percentage of U.S. soybean production averaged about 35% in the 1990s. It's interesting that they don't mention China there. I know they do later in this article. The export percentage then grew, reaching 15% in 2016 and 48% in 2017. Exports declined dramatically in 2018 to 40% of production. I think we all know why. And in 2018, the President Trump instituted tariffs on U.S. imports from China, and China responded with tariffs of its own. They're targeting various U.S. imports, including soybeans, and imports rebounded, reaching 53% in 2020. Since 2020, U.S. exports have declined partially because of strong domestic crush and oilseed demand. The United States are large soybean producing countries, with the major export destinations for both countries being China. China has continually increased soybean imports primarily to increase meat consumption in their country. Brazil has increased production to meet its own demand, and China's surpassing the U.S. in soybean production in 2017. Relative to production, a lower percentage of U.S. corn is exported than for soybeans, and the share of U.S. corn exported trended down from over 20% in the early 1990s to around 15% by 2010, a level around which has varied over the past 15 years, of course, mainly based off of rises in production in South America, as well as domestically in China. The export percentage of U.S. corn production was 15% in 2023 and 16% in 2024. In 2023, the largest country receiving corn was Mexico, and the value of $5.39 billion. Japan was second at $2.07 billion, and over time, Mexico and Japan have been consistent buyers of U.S. corn. The third largest country was China at $1.63 billion. Chinese corn purchases began in 2020, reaching relatively high levels in 21 and 22. Those levels declined in 2023. All of these countries are important trading partners, which could implement retaliatory measures if the U.S. implements tariffs on imports from these countries. The U.S. is by far the largest corn producing country in the world. However, Brazil has become an important exporter of corn, with corn exports exceeding those in the U.S. in 2023, largely due to prices, the drop in the real, and Chinese demand. Well, there you go. All the numbers and hard and quick at you. When moral of the story is, right, there's been big fluctuations, and we've never really returned to some of our being the king of exports of these products that we were in the 90s and the early 2000s. We'll see. We will see.
Yes. Starting tomorrow, February 1st.
Starting tomorrow. I mean, it's funny,
tomorrow.
right? It's like there is not much to say. We just need to sit back, wait, and kind of see how everything lands, right? See how the chips lie.
My suspicion is that the administration would prefer not to do this, and it would not surprise me if we find our way through this with 11th hour negotiations. So I think. You saw a lot of the reporting this morning talking about the high degree of uncertainty that we were facing coming into this weekend and at the beginning of next week. And I would not be surprised. This is just me personally, right? And I don't have anything scientific, and I certainly don't know anybody in Washington, but I think that it is a thin line between love and hate. And the administration has enjoyed tremendous support from the middle of this country and the agricultural community and agricultural producers specifically. And some of these moves could very well be construed or very well turn out to just actually be not great for agricultural producers in this country. And so I think that rather than risk that, they would prefer to get some sort of arrangement, get some sort of agreement in place that could make it easier for us to do this business that we should be doing with our important trading partners, as opposed to be reading about it in the news. But I may be just talking my own position, since we are fond of a few agricultural producers here and there, and we want everything to work out. But it really feels like they would prefer for this to be ironed out with all involved sooner rather than later. Does it feel like that to you as well?
Oh, I think it has to be. I mean, agriculture is always one of those things that you can't really live without, right? We could find a way to live without cheap Chinese products. We could find a way to live without Samsung TVs. We could find a way to live without this, that, or the other. Food on the table is not something anyone in the world can find a way to live without. So I think it's almost like basic game theory that says that these things will very likely get resolved. I don't want to say resolve themselves, but I also want to call to attention that Trump, generally speaking, uses a shock and awe kind of marketing campaign with everything he does. He first blasts out, right, I don't want to say insane thoughts or ideas like, for example, it's not the Gulf of Mexico, it's the Gulf of America. And what is that all about, right? It's not about necessarily needing to change the Gulf of Mexico to the Gulf of America, which the Internal Department of whatever it's called, Homeland, actually did do. But the point is that it started a conversation around broader Mexican-U.S. relations, right? We have the same amount of coastline, this, that, and the other. You can make this argument for it. But what it's really about about is a shock and awe marketing and media campaign to try to get people riled up, talking about a situation, a problem, and then finding maybe the strings of commonality and the more sane approaches to things like, for example, what he did with Colombia as well. The whole point is that he likes to say things, and this administration likes to do things up front that causes a conversation to be had. It jars some people and might even invoke emotional responses, but at the end of the day, it's saber rattling. Not so different than what China and other countries do at times when they're talking about Taiwan and other more palpable type of palpable topics, right? So I don't take anything that they say at face value right off the bat. I think you need to let things settle down, let the stew a little bit, and then we'll see, what really is on the table here shortly, which I think every other time they found a way to come a meeting of the minds over agriculture and trade policies. I don't think this will be any different. We just got to get through this little bit of turmoil and shock and awe media marketing campaign before we get there.
I hope you're right. From your lips to God's ears. How about that, right, everybody?
Yeah,
let's hope Dan's got it nailed right on the head there. We'll find out.
We skipped our question of the week last week. I'm sure Carter's going to make it up to her 2 weeks ago.
I think I missed a couple. I might have missed a couple questions about things for the week. The question of this week, I think, is if you were going to eat some ice cream. Did we ever do this one?
No, I don't think so.
If we're going to eat some ice cream, what flavor
would
it be?
When?
Or how? Yeah. So when you eat some ice cream, number one, how do you do it? And what kind of flavors are you talking about? This is the important stuff. Forget about tariffs.
I don't know how you guys
know what I mean? Right? Straw.
What? Yeah. I'll let you go first on this one. What's your favorite?
So you can't really tell because camera takes off, 5 or 10 pounds, and I'm all svelte looking. You can't tell that I'm a fan of the ice cream. I don't think I've ever met an ice cream that I didn't like. But a couple, 2, 3, 4, 5 scoops of some daiquiri ice. That would be terrific. The old standby cherry cheesecake. That would be good. But whatever you got is my answer to that one. I don't know. I don't think I can't really rule out any ice creams at this stage. How about you?
I can't disagree with that. I'm a sucker for the cookie dough, but I think my favorite is a mint chocolate chip, man. Mint chocolate chip's one of my favorites. And actually, the Fannie Mae melt away ice cream that I think Dean's does. Got a shout out to them. I mean, all the brands came out with some Windy City mint thing too, but man, that is good. It's got it's like basically a Girl Scout, one of those mint melt away girls or mint, whatever. What do they call it? The mint melt away? Thin mints. Thank you. It's like if you ground up thin mints and threw it into mint chocolate chip ice cream. It's just delicious.
That's a really good idea. Yeah, right.
And I'm not going to lie. I've done exactly that. So pro tip, next time you're, getting some Girl Scout cookies, pick up some ice cream. You can have yourself an evening.
That's what I'm talking about. Carter, who comes up with these amazing questions, what's your favorite flavor? Cookies and cream?
Cookies and cream. All right.
Carter says cookies and cream. So that's it. Covers all 3 of the bases there. Next time we do it like that.
Absolutely. Well, thanks for listening to here today on the Zaner MarketCast. If you need more, because you just can't get enough of us, you can follow us on Facebook at Zaner Ag Hedge or on Twitter and LinkedIn at the Zaner Group. You should also check us out at booth 2005 at this year's Commodity Classic in Denver. We'll be there live broadcasting some of the streams, answering questions, meet and greeting, and of course, heading out for drinks and dinners with anyone that wants to come and shake our hands and get to know us a little bit more. So please come enjoy us at Commodity Classic. Oh, it's the best. If you can't make it this year, make sure to put a pin in the calendar for next year in San Antonio. That's a crowd favorite. Let me tell you, Classic's always a good week, but it's in Denver this year. If you have any questions that you'd like answered on the show, there's a link for you in the description to do just that. Just follow the instructions and we'll answer them right here on air. Thank you again, and be sure to like, comment, and follow the podcast and not miss a beat. And we'll be back with you as price action develops.
Thanks, everybody. Have a great weekend.
Thank you. Have a good one, everyone.